The Fed is crashing the housing market.
Oh no!
Some economists are predicting a 20% plunge in home prices by next summer. All the while, we've been suggesting real estate as the quickest, safest, and surest way to become wealthy.
Emotional damage!
The current US housing market has me feeling some kind of way. As the Federal Reserve continues to wage its war against record high inflation rates, it looks like inflation is stuck with us. Like fat cat stuck in a doggy door stuck. For at least the next year or even longer. This indicates that the downturn in the US housing market is not going anywhere anytime soon. I'm glad I have an Anish to get us straight one way or the other. What's up, everybody? I'm Sean McMurray, co-host of BPM RIA Online, and this is Mr. $250 million in real estate transactions, my mentor, my good friend, president and owner of BPM RIA, Anish Dave.
Hey, this is Anish Dave, CEO of BPM RIA, and we're in the middle of a hurricane, Hurricane Ian. Hopefully our partners out in West Florida are going to be safe. We're here on the East Coast, and so far, we look like we've dodged a bullet.
Yeah, we got really lucky. But before we get too far into the video, Anish, could you tell me exactly what the status of the current U.S. housing market is?
Yeah, so, Sean, I know that, we're starting to see a plunge of a 20% correction. And again, that's nationally, right? So it is a little worrisome, but again, if you're patient and we're worried about cash flow, if you're a buy and hold person, or you just gotta be a lot more conservative with your numbers if you're rehabbing. Gotta have multiple strategies out there. Even though interest rates are rising, you gotta start getting creative with your deals.
That's interesting. So let's dive into it a little more. The United States is in a housing slump. What does that mean? Industry professionals have predicted the current housing recession about as well as ancient Mayans predicted the 2012 apocalypse. And to be fair, I don't think that's what the Mayans predicted. It was more a misinterpretation by this guy. But in all seriousness, and by seriousness, I mean not serious, the combination of excruciatingly high inflation and growing borrowing prices has proven to be fatal for the housing market, which has caused prospective purchasers to limit the amount of money they are spending. If you want more insights about the current US housing recession, make sure to check out this video. Housing recession, the game is over. Not really. Great info there. Numerous economic indicators that released at the beginning of this month demonstrate that the industry is beginning to slow down significantly. Homebuilder sentiment has fallen to its lowest point in 2 years as of April and has continued to fall for a total of 9 months as of September. However, the effects of the recession have affected the buyer and the seller differently. Even when there is a decline in demand, prices have not come down because there's just not enough inventory. Although, as a result of rising mortgage rates, an increasing number of prospective buyers are pulling out of deals, sales are reaching their lowest level in the past 2 years, builders have been increasingly reluctant to develop new houses, which has the effect of maintaining those high prices. According to the National Association of Home Builders Wells Fargo Housing Market Index, which measures the pulse of the single-family housing market, builder sentiment in the housing market dropped to its lowest level since the beginning of the COVID-19 pandemic in August, signaling a downturn in the market. The index dropped for the 9th straight month to reach 46, marking the worst period for the housing market since the global financial crisis of 2008. Any reading above 50 is considered positive, and the gauge has not entered negative territory since a brief but dramatic decline in May of 2020. A prominent economist has cautioned that home prices in the United States are likely to drop by another 20% by next summer, and the housing market is already experiencing a recession. According to Ian Shepherdson, chief economist of Pantheon Macroeconomics, cited in a research note issued on September 21, 2022. The dropping trend in sales has further to go and prices are falling. According to the estimates provided by Shepherdson and his group, the prices of previously owned homes slid 0.7% in the month of August. This marks the third consecutive monthly drop in prices. According to their findings, housing prices have already dropped by approximately 5% since their all-time high in May and are on track for even more declines despite the limited supply of available properties. Economists are stopping short of nuking future home prices due to low inventory, although they still anticipate a total fall of up to 20%. In their words, in a nutshell, the housing market is experiencing a downturn, and everything that is tied to the housing market is either experiencing a downturn at the present time or will do so in the near future. Anish, after I've said all of this, what are your thoughts? Will we see further declines up to the 20% next summer or more? What do you think?
So Sean, one of the things that's really interesting to me, especially these forecasters, right? They seem that they know everything. How many houses have they bought? Are they boots on the ground? Who would have actually forecasted the Miami Dolphins, our Miami Dolphins down here, are 3-0, the only undefeated football team in the AFC? All those pros got it wrong, right? So for us, we're boots on the ground. Affordable housing is still a shortage. We actually have a deal currently right now that we are getting over asking price on affordable housing on a purchase price of around $240,000. So there are buyers in our market. It just depends what segment you're in real estate.
Yeah, that's a really, really good point. And it's crazy that they're predicting such a drop, but it's a relief that these economists are not predicting the current housing slump to crash the rest of the U.S. economy due to the housing market having fewer entrenched risks that it had during the housing bubble of the 2000s. Which is a huge blessing because I'm retiring in 2 years and 2 months. That might delay things a bit if it were to happen. So what do you think, Anish? What will happen to the housing market if the U.S. economy crashes?
So again, people are still going to need homes. We are still seeing rents go up. In our market here in South Florida, guess what? Nothing's really gone down too much when it really comes down to housing. Again, we still want to be here. A lot of people still want to come down here. And even with a hurricane in our near future, people are not running away, right? We're still happy living in Florida. And the cool thing is, as people, start getting that fear, they might unload properties and you might actually get some better deals out there if you're playing the long game of, short-term rentals or rental properties.
I love how optimistic you are, Anish. And again, we are solutions people. We will figure out how to make deals happen in any economy. But even so, there is still an increasing amount of worry regarding the industry. Consumers' finances have become increasingly difficult to manage as a result of inflation, which hit a level not seen in the previous 4 decades in June and remained above 8% in August. Before we move on further, make sure you like, share, and subscribe to our channel. Remember, we are not doom and gloom here. We provide the data, and then we provide solutions on how to navigate this market. So subscribe if you want that contrarian point of view. As the Federal Reserve attempts to put a stop to runaway inflation, it has begun to tighten monetary policy at a rate that is the fastest it has been in the past 3 decades. The decision makers have opted to approve 5 consecutive increases in the interest rate this year. So the Federal Reserve has increased interest rates from near zero at the beginning of this year to over 3%, which has increased the cost of borrowing money and pushed long-term mortgage rates above 6% for the first time since 2008. As a result of rising mortgage rates, the demand for newly built homes is fast diminishing, which is resulting in a decline in the price of existing homes. The combination of eye-popping valuations, growing expenses of living, and increasingly expensive and less available credit has continued to pile pressure on property prices and sales over the past few months. The chairman of the Federal Reserve, Jerome Powell, has made statements that suggest the United States Central Bank wants to lower the cost of housing. This would help to rebalance the supply and demand for housing return appreciation to sustainable levels and make housing more accessible to lower-income individuals. All right, Anish, final words. After I've said all that and we've presented all this data, what do you think about all this? These are final words.
Yeah, so again, we know the Federal Reserve keeps raising those rates, right? And we don't know, they might even go a little bit higher. And now we've even seen mortgage rates above 7%. So what do? You got to get creative. Push that inflation on somebody else, right? Leverage. use the bank's money, use private money, do creative financing, take over subject to properties. You just have to get your game getting better and stronger and not be that one-trick pony. Don't be scared. When people are running away, this is when you jump in. And this is where the next set of millionaires will be in real estate.
And we're out.